One of the things I was taught was to take notes when you make trades of why you did the trade, what your expectations were, what your risk tolerance was, what your time horizon was, because your internal voices. So we've got trading psychologists as well as part of this course, because your own enemy is yourself.
Hello and welcome to Wealthy Value. In today's video, Real Vision CEO and macro guru Raoul Pal updates about his macro thesis on the most recent crypto rally, changing narratives and shocking declines in the economic growth. Raoul also speaks about whether the crypto markets will retest the lows or rip higher, his thoughts about a market bottom, and the importance of having a longer time horizon in crypto investment. Make sure to stick around till the end of this video where Raoul Pal explains his views about the upcoming Ethereum's triple halving event and what it means for the space. By the way, are you losing money because of a crypto market downturn? With Margex trading platform, you can open long and short positions so that you can profit even during falling markets. Margex has been nominated by finance magnates as the most user-friendly trading platform. Cross-margin is available on all assets, and you can trade with up to 100x leverage. Keep in mind that leverage trading involves risks. That's why if you don't feel confident enough, you can trade with small amounts. The minimum deposit is only $10 and minimum trade size is $1. You will never find any hidden commissions on Margex, and all deal indicators are on screen and available in real time. It's possible to use 10 cryptocurrencies as a deposit option. For a limited time, you can get a 15% bonus on your deposit. First, sign up through the link in the description. Make a deposit of $300 or more, enter your promo code on the wallet page, and get a bonus of 15% on your deposit amount up to $10,000. And now, back to our video.
Everything is coming into focus and it's really becoming crystal clear. I've been writing about this in Real Vision Pro Macro for months, saying, okay, this is where we're going. These things take time to play out. And these things mean, okay, the markets need to price in a collapsing growth, and the inflation story is going to change into a growth story, and it's going to pivot what markets do. So things like oil, which have been leaders, will not do as well. Commodities will get hit because of demand destruction, and we'll eventually see bonds rolling over, and probably more so oil. And as we see that trigger, we will see the kind of growthier end of the market starting to outperform. So that had been my base case for a while, and I've been counting it down and showing people. I've showed it on Twitter, I've been writing about it in depth and talking on Daily Briefing about it, and also on Real Vision I've had some updates. But basically, it's now become clear from the forward-looking data, the Philly Fed and everything else is just showing it. But if you start to look at the really forward data, like the new orders component of all the regional Fed surveys, they're pricing things like ISM at 35. These are shocking declines, which I've been trying to tell people about. Is economic growth over the next 3 months is going to shock people to the downside. And it's going to change everybody's narrative from, okay, we're in this sticky inflation environment, the supply constraints, to, oh my God, we've broken the economy. And I can see that globally happening as well. So that's what I think we're setting up for. I think it's not next week, the week after is ISM. That's the big one for me, because I'm expecting ISM to either hit 50 or even go through it, which would kind of surprise people. But I think it goes below 40 in the next 2 to 3 months, which is not what people are expecting. Corroborating evidence is that crypto started going up, and many of these tokens have risen 100% in a week and a half or 2 weeks. Now, they broke these patterns where everybody was expecting another leg lower, much like they are in equities, which makes me slightly suspicious of equities, which I don't like being short. But crypto did really well. It's now overbought. We're putting in like DMARC 9 patterns, which tend to be a short-term correction. Now, do we go back to retest the lows based on the growth numbers and other stuff? I don't think so. I think we're more sideways consolidation than another rip higher, but it's not clear to me. But I think the base is in, and I've been saying that for a while now, because crypto is a very forward-looking asset, and it will look further ahead than anybody else, and it's sniffing out the change in bond yields. So that brings me on to the most important part, which is bond yields. bond yields are now rolling over. As I've been forecasting, they're about to break a head and shoulders top pattern. So, Brian, if you can show the head and shoulders top pattern, which is this chart here, 275 in 10-year bond yields. If it breaks that, then we should start to go down below 2%. I think somewhere around 175. So that's not what the market expects. But if you think of what that does to growthy assets, it's taking down the future discount rate. And if that means that inflation is coming lower, then you're taking some of the inflation expectations out. So things like what I refer to as the exponential age stocks, the further out the growth curve. So the dollar's been screaming higher. It's kind of stabilized a bit for now. It's not yet clear to me if the dollar moves another leg higher now, or we correct a bit longer and then move higher. Don't know. I imagine if growth implodes, the dollar moves. The dollar is already pricing ISM around 45, so it's already pricing a full recession, but I think it's going to be bigger than that. So I think the rate of change in the dollar goes further. So that's still a wrecking ball, still to keep playing out over time. I think there's still washouts to come from the energy sector and others. Doesn't mean we go all the way back to the pre-COVID levels where many of the markets have got to, but we're going to retrace a lot more of that. My base case is that oil comes down somewhere between $80 and $60, to $80 and $60. The equity markets are somewhat more complicated because they're already pricing in. The S&P is pricing in ISM around 45, so there's a bit more room. The NASDAQ is around about 40, so it's pretty much priced in what I think is coming. My forward-looking indicators, which I'll show in a minute, will suggest that the bottom of the economic trough is like March next year. But I think stocks bottom first. So in 2018, they bottomed a year before the economy. In 1974, these are the parallels I've been using. It bottomed 3 months before. So it's somewhere between that. So I think they bottom in the next few months, or they have bottomed. So time horizon plus the volatility of the asset will set your position size, which is your risk. Right? So crypto, long duration, big volatility, smaller positions. So it fits within the risk tolerance that you have, and you can tweak those. But yes, we teach all of this kind of stuff because all of these things need to be mapped together. I mean, one of the most incredible things I ever saw was when I asked Kyle Bass to interview John Burbank, so two really famous hedge fund managers. First question, Kyle, he just couldn't bleat it out fast enough, was, John, how do you size your positions? Right. These things are hard questions. There's no simple answer, and we cover all of this too. Now, a lot of people had the narrative that this was driven by the halving. Now, maybe the halving, which is a reduction of supply every 4 years in Bitcoin, is a factor because it's correlated with liquidity. So what you're doing, you put more liquidity into the markets, it leads to more people able to allocate capital into a low supply environment, which is the halving. You don't need the halving as a necessary precursor. Ethereum's about to have a triple halving event. I'm going to do a whole update over the weekend. I'm going to film for Real Vision members about all of this. The macro, crypto, the ETH merge, ETH yields, why it all matters. But the point being is macro is the driver of everything. And once you understand that, you understand where the world should be going.
So are you excited about Ethereum's triple halving? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.